Good afternoon and welcome to the Freedom to Buy podcast presented by SuperNet. I'm Joe Dworsky, the president of retail banking for SuperNet. And each week on our podcast, we'll take you behind the scenes of banking, finance, payments, and technology to help educate both businesses and listeners like yourself on how to make the most of your purchasing power in the world of credit. My next guest has over 24 years of experience as a portfolio manager, allocator, and capital markets professional across multiple asset classes. He is a recognized voice within the investment community as a trader and market strategist. For over a decade, Tim has been a regular contributor and prominent voice on CNBC's Fast Money, as well as being cited as one of the top finance professionals on X, formerly Twitter, as well as recognized by the Wall Street Journal's top tweets for your money. He's also a pioneer in the cannabis investing space and notes this is an exciting time in a high growth and emerging cannabis sector, and his firm has been actively investing in cannabis through an ETF that Tim manages on a daily basis. Please welcome to today's show Tim Seymour, portfolio manager for Amplify Seymour Cannabis ETF. Tim, thank you and welcome to today's show.
Thanks for that lead-in. Boy, that sounded very impressive. Hopefully I can live up to that. No, it's fantastic to be here and look forward to talking about some of the really important things that are always moving around in the cannabis space with the common thread has always been the excitement, the optimism for growth investors, leaving aside the social dynamics. I mean, we are talking about a sector that's underinvested, that there's very little institutional money. And there's a lot of structural reasons for that. I've been investing in emerging and new asset classes a lot of my career. And that's kind of what got me focused on cannabis. And, it's never a straight line, and it's not supposed to be. But these are pretty fascinating times yet again, as we've been through so many cycles here. So looking forward to the conversation.
Absolutely. I wanted to take a step back. You kind of gave a little overview there just to give our listeners a little background on, how you started. You started to touch on that and what led to getting into the cannabis world, and then talk about the ETF that you launched back in 2019.
Sure. I actually, for 13, 14 years, ran a long-short emerging markets equity hedge fund. And I lived in Russia for a couple of years. I spent a lot of time traveling around the world looking at these high-growth markets. And when cannabis started really percolating, it's a decade ago, but, for me, a lot of my real, I'm paying attention to this, started when one of my former partners from my EM days was asked to basically head up the U.S. business for a company called Tikkun Olam, which was Israel's first medical producer and, one of the early pioneers in terms of a lot of the science and a lot of the medicinal advocacy that was coming out of Israel, which, people tend to know is always a leader in terms of some of that focus across biotech and healthcare and whatnot. So anyway, when an old friend, a good friend, a partner said, this is what I'm doing, I said, wow, I really need to think about this. And I made an investment and they put me on the advisory board. And this is 2016, early 2016. And I knew that we'd already seen some legalizations. I knew we had a couple catalysts coming in California and north of the border. And I said, this makes a lot of sense to me, especially when emerging markets are often driven by some of the same dynamics that we have at work here, which are, again, from an investor's perspective, there's always a heavy macro component of it. There are catalysts, there are elements either of geopolitics or macroeconomic or legislative moments. It's always also characterized by very shallow, immature, and in many cases inefficient and maybe structurally, difficult to be accessed capital markets and exchanges and ways to allocate capital. So, there's always, those dynamics and boy, that stuff fits cannabis to a T. So as I started to do more work in the sector and started to really also understand some of the social dynamics around it and why it was happening, the rest is history. It's been 8 or 9 years of where, I think the cycles we've seen have all been different, but it really reminds me of, investing in Russia, which by the time, I had really, settled in, I kind of caught I moved to Russia in the fall of 1998, and Russia had already had, arguably, one and a half, maybe two cycles already of kind of, boom bust, and then, add a couple more. And again, this is why I find it very exciting. I also believe that there's just a lot of folks that really either don't have the means to invest in the space. And that's why running an active ETF to me makes a lot of sense, and why diversification makes a lot of sense, and why
the markets move very quickly. I mean, you're not to cut you off.
No, go ahead.
What you said about Russia, obviously those are very fast moving. They were very fast moving, very volatile markets. I remember, investing in a couple of exchange traded or Russian companies here.
Yeah.
And they move very quickly, obviously. A lot of volatility. So that overlay into what's happening in cannabis, you mentioning that this is a actively managed ETF. I mean, I imagine you have to be trading in and out of these positions. I mean, the cannabis market, obviously they've thrown out the baby with the bathwater over the last several years, in cannabis. So it must be more from an active management perspective, the best way to generate alpha if you can.
I think so. I think active, certainly, as opposed to passive with rebalancing based upon, a 3 or 6 month lag on news flow. It's no question. And an active strategy is one where both stock picking and, call it alpha generation is driven by a handful of things. It's not only meeting with companies and understanding what their balance sheets look like, what their income statement looks like, where they have their assets, where they are looking to allocate capital. But it really is understanding some of the dynamics in those markets themselves. And if you think about what's been going on also in the cannabis world for the last 6 months, you've had a couple of bigger companies in the space actually list up in the Toronto Stock Exchange, and the TSX is arguably one of the top 3 exchanges in the world. A level of accreditation and a level of compliance, kind of oversight that actually makes it a lot easier to invest in these companies. And the reason I bring that up is a lot of times, running an active strategy, it's understanding where liquidity is, where some of the structural dynamics are, where investors may not want they may not even have the ability to invest if the best company, quote unquote, whatever that means, is actually, listed on an exchange or in a market that they can't access. They're going to get the next best thing. So alpha is generated in many different ways. But there's no question that being active in this space, trading in and out of these markets probably is almost impossible. But making tactical calls and making real calls, whether it is on a day-to-day, week-to-week basis, I think that's critical. And we're going to continue to see it. And look, if in hindsight, fading any major move we've seen in cannabis over the last 5 years would have made you a lot of money. There's no question that you could trade this market, and there's a lot of opportunity to have probably traded it effectively. Our mandate really is the companies that I think are the best positioned today, and the ones that are going to be also the right ones for tomorrow. And I also want to own ancillary and picks and shovels and software and financial services. And cannabis, the investable market cap, is pretty much dominated by these large, and again, it's all relative, but big, large, vertically integrated companies that, right now are a way to invest. But I think longer term, we're going to find the ability to really be, finding the subsectors. And it's going to get more sophisticated every day.
Right.
And that's the cool thing about investing here actively.
Two follow-ups on that. You mentioned, the Canadian markets, Canadian listings. Obviously, we've seen, more of these U.S.-based companies, go north of the border to get listed on the Toronto Stock Exchange. That I thought that was slowing down, but based on what you're telling me, I guess that hasn't. When do you see that changing, and where more of these U.S.-based cannabis businesses start listing on the New York Stock Exchange, the American Stock Exchange, versus going north of the border? Is that have to do with federal legislation?
It does. And so there's kind of two different moments in time for U.S. companies going north of the border, and they're very different. And it's a great question. Let me explain the difference, because I think if you go back to 2018, 2019, U.S. companies were listing in Canada, and U.S. investors were buying them on Canadian exchanges because of the federal dynamic. And perversely, Canadian companies were listing on the New York Stock Exchange and on the NASDAQ, and whether it was Tilray or Canopy Growth or Aurora or, some of these companies that are barely alive at this point. But, Tilray at its peak was a $25 billion market cap on an intraday, at least, low off top. And so those dynamics were crazy then, and they were frustrating for U.S. investors. And as a guy that's on CNBC too, talking about the cannabis space, not only am I always careful about, trying to really just talk more about the investment dynamics of a sector like this rather than picking the horses. But people used to always say, hey, Tim, why are you talking about all these Canadian names when it's the U.S. is the biggest market in the world in every sector, and it is here in cannabis. And we're in the U.S. So why are we doing this? And it's the reason we're doing this is I wasn't talking about the Canadian names as being the best ones to invest in or the worst ones. I was really, part of the dynamic is when Tilray trades in the New York Stock Exchange or the NASDAQ, it becomes a proxy and a vehicle for investment, whether it's the right name or not. Tilray is a very different company than it was back then, by the way. And in fact, they merged with another company, and I think ultimately, actually, they merged with a stronger Canadian, call it competitor at the time. And I actually think that the combination of the two companies is actually a very well-run company today. And we actually own it in the portfolio. I would have never owned Tilray 1.0. And so, but, today what I talked about is a very different thing, which is that U.S. companies like Curaleaf or TerraSend, who have gone to the TSX, they've done that purely because that is a world-class exchange where many institutions won't invest on the CSE or smaller exchanges in Canada because they don't have necessarily the same regulatory framework or compliance, call it stamp of approval. TSX is one of the best exchanges in the world, best being for compliance dynamics. Compliance officers in any place shouldn't have any issue with a company, at least based upon its listing status and the federal dynamics. And so Curaleaf and TerraSend listing on the Toronto Stock Exchange is a precursor to them listing on the New York Stock Exchange. And I think that's the good news here. This is actually a really positive event for the industry, whereas companies that were running up to Canada in 2016, 17, 18, and 19 and buying shell companies on the CSE and doing a reverse listing, that wasn't great. So it's a slow evolution. At some point, we're going to have full accessibility to cannabis companies in the U.S. And there's some important things to talk about with that. We're able to invest in swaps on U.S. companies or own them outright on the TSX. The good news is that CNBS can own Curaleaf on the TSX. I don't need to own it in swap. Same with TerraSend. And then a company like GTI, which is the biggest position in the portfolio, I do own on swap because I have to own it on swap because they're not trading in an exchange that allows me and allows our compliance. And an ETF is an SEC governed 40 Act product that has a lot of really important rules attached to it. And that's why people love ETFs, because of those protections.
But did you feel that that's the best route for, investors to participate in the cannabis, the emerging cannabis markets going through an ETF?
Look, I do. I'm clearly biased. I also think that there's an element of both diversification, and this is what I would call, the alpha generation is a combination of stock picking, of being tactical, and then also just being where we are positioned within a thematic ETF. So the correlations between the companies are high, but they're not as they once were. And so I do think that, look, I'm constantly talking with these companies, constantly going to events, going to see facilities, reading research. I mean, there's a lot going on here, and it's moving quickly. So,
and where do you see the sector in the next 3 to 5 years? That, as well as what kind of turnover do you see in your portfolio, given the fast pace of this emerging market?
Portfolio turnover question, it goes through periods where I think we're more active than others. I'm constantly asking myself every day whether we have the right positioning and whether we have the right exposures. And you obviously are working in, call it the financial services part of this industry. And to the extent that I think in the same way that investors want exposure to payments, whether it's digital payments and whether it's, all the sophistication that are coming with that and the software, those same trends are unfolding, as you know well, inside the cannabis industry almost simultaneously. I want to be exposed to that as well. And I think that's really where, every day back to the portfolio, we're trying to gauge whether we have the right positioning for this sector as it exists today and where we think it's going tomorrow.
Let's talk a little bit about all the headlines in the cannabis industry that will potentially benefit, the cannabis-related stocks as well as ETF. You're talking about rescheduling, 280E, safe banking, and your thoughts on how this will impact investment opportunities in these publicly traded companies, as well as private companies that, want to go public.
So the cannabis industry has always had big macro headlines that have been massive catalysts to price movement. And it has often been around some type of, federal dynamic. And if you go back to even at the end of 2020, we're in COVID, but there was an election cycle that, summer into the fall, and cannabis stocks were rallying into a sense that there was going to be a change in administration. And when that change happened, they rallied, and they rallied even more in January when we had a runoff in the Senate, which seemingly led to the Democratic control of the Senate, along with a Biden administration, people thought was going to be a slam dunk for cannabis. And so cannabis assets rallied and went through the roof. And the fact of the matter is that the legislative process in DC, we all know how dysfunctional it can get. And so those headlines have been a big part of, investing in cannabis for a long time. The headlines that came out in the summer, which I think are notable because they're different. They don't require the same type of legislative follow through, but really within the Biden administration, there was an announcement in October of 2022 that Biden was very focused on the criminal justice component of this, and also the element that was going to allow at least there be a very healthy look at the efficacy essentially of cannabis as medicinally valued and not just a drug that is similar to heroin or LSD or whatnot. So the point was, the administration said back in 22, we're gonna put the FDA to work to come up with a recommendation and bring that to Health and Human Services, who will then take it from there. And ultimately, the headlines that came out in late August were that Health and Human Services, who essentially presides over the FDA, had written a letter of recommendation to the DEA, who would ultimately control the schedule of drugs in this country, that cannabis should be rescheduled. Cannabis stocks rallied anywhere from 50 to 150 to 200% because you mentioned 280E. One of the biggest issues for cannabis companies today, even the ones that are operating legally in the states that they're operating in, and again, these state by state in this country, we continue to see not just medical programs, but adult programs roll out and do very well. I mean, the states are moving and marching on a straight line towards every state in the union is going to be a cannabis legal state. But in the meantime, the federal government hasn't really changed their view on this. I'm not sure that the federal government's going to change their view on this anytime soon, even though every state at some point probably will legalize. But the great news here was that if you reschedule the drug from Schedule 1 to Schedule 3, you remove what's called Section 280E. And that is the punitive taxation on these companies because they are selling an illegal Schedule 1 drug product, which means that from an accounting perspective is really where the rubber hits the road here. These companies are unable to subtract, traditional cost of goods sold. So they're taxed really on a gross basis. And it's crazy. So it means almost by definition, a lot of these companies are unable to be profitable. If you remove 280E and allow these companies to actually subtract proper cost of goods sold, and especially the big integrated companies, you're going to have a free cash flow dynamic for the industry immediately that's going to change really not only the balance sheets, but the fortunes of these companies and frankly, the fortunes for investors investing in it. And none of this requires Congress to vote. This is all, effectively within this administration to make something happen. So we finally got some more detail on what the Health and Human Services actually forwarded onto the DEA, and it included a 250-page report on the dynamics in the cannabis industry, but really around cannabis, marijuana, as it's been coined. And, there's a lot of people that would make an argument I agree with that marijuana as a term was intended to be derogatory and limiting. And so I'm always referring to cannabis as cannabis, not as marijuana. But boy, this is a 250-page article on where I think they kind of were wrong. And there was a lot of mea culpa in there. And look, the expectation is that the DEA will reschedule. The question is when. We don't know the timeline on that. And obviously there is a political cycle to be reckoned with. But it's a very exciting set of headlines that I think makes sense given kind of, they kind of piece together and fit together with how the Biden administration, who's been very inconsistent, by the way, on cannabis, how they are looking to kind of move it forward. And there's no question that I think cannabis is an election, it's an election item. And I think
right.
Cannabis is what they're pushing.
Right. What do you say? I mean, given what's going on in the markets, so far this year, obviously we had the first Fed meeting yesterday. We heard what Powell's comments were. They're not making a change at this point in time. What are your thoughts and views on Powell's comments and where Fed policy and cutting rates will be for the rest of the year?
Well, I think I heard two things from the Fed yesterday. One is that the labor market remains very tight and that inflation remains above their target. And that while they won't be hiking rates anytime soon and are done for this cycle, but I don't know they're going to be cutting as fast as the markets had priced in that they would. Having said all that, I think we've already seen, and we are the day after as we talk today, those statements, markets already rallied back and taken back most of what it lost. The dynamics for investing in higher growth assets and cannabis, definitely would be a high growth industry. And, some of the comparisons or the correlations are to, high growth tech, high multiple tech, ARC, these are things that people have often charted those comparisons. I think cannabis trades on its own, but there's no question. Since October 26th of last year, markets overall, including, have had a massive rally. Semiconductor space is up 40% from October 26th through the highs a couple days ago. Mm-hmm. The S&P was up almost 20%. The NASDAQ was up 25%. Cannabis assets are up 60 to 80%. And so some of it's related. I think a lot of it is cannabis independent, but there's no question if global markets are hemorrhaging and going through a real contraction in risk and a risk off moment, it's very difficult for cannabis to rally. So what's happening in cannabis, it's fortunate that it's coinciding with a period where people have been a very risk-on period in markets. Cannabis as a sector year to date is, up 20 to 40%. There's a couple of names in the portfolio that are up over 100% year to date. And
yeah, so it doesn't sound like higher interest rates over the last year has impacted any of these companies, because obviously it's more costly for these, emerging, small caps to borrow because they don't have the free cash flow to the bottom line like a big tech company does, and they have to go to the banks and the markets to borrow. But it doesn't sound like that's impacted them over the last year based on the returns that have been generated.
I'd say there's no question to me that higher interest rates and what Fed has done to capital market cycles very much did affect cannabis. And I would say because cannabis companies have less access to capital, it affected them even more. So what we are seeing is that as rates have come down and we are near we're at peak Fed and we're at peak rates and we're coming in. It's a question of how fast we're coming in. But cannabis markets snipped out the same peak in the Fed that happened in the late fall. So that's, I would say cannabis was, and these names were very much hurt by the same environment that other stocks were, and hurt that much more. And on the way down in rates and the change in those dynamics, they've really outperformed. And that outperformance has clearly been helped by also the cannabis specific headlines. So it is a really interesting time. And just, the cannabis markets, because it's kind of been a closed world of those that have been able to access it. From the investors, it's very technical, and the technicals have been very good 3 months. And you see cannabis companies that are now trading above the highs they hit in the euphoria after this FDA announcement in late August into September, after they did pull back dramatically and test the lows from before that news. Again, the price action has been really constructive. We're making higher highs. And I'd say the best and highest quality companies in the space, their charts look even even better. So I like the technical setup here, even though I don't think we've had a lot of new money come into the space, even with all this good news.
Well, it sounds like it could be an opportune time. I mean, or the Fed starts to cut, because they've performed well in anticipation. And I imagine when the Fed starts to cut, that will make that, borrowing that much more accessible and cheaper. So I would imagine this is a good time to get into the ETF or get into the cannabis space if you want to see some opportunity over the next several years.
I think it's a fascinating time to be coming into the market. It's a market that's, we're at 6-month highs, we're at 9-month highs, depending on what you're looking at. So it's had a nice run, but we're still so far off the highs. That's not a reason to buy anything, by the way. Something could be down 80% and, it starts to rally. And if there's not a fundamental argument for owning it, it should, project that bounce. But the combination of the top down and the bottom up from the companies themselves that are operating as efficiently as they ever have. I mean, they've been forced to raise their game. Yeah, any good crisis is forces every company to become nimble and to become efficient. And I think the cannabis industry is no different. The macro headlines in the space are very friendly. And I think, the investors like me that have seen multiple cycles are going to say, look, I'll be cautious about this, and I'm not going to ever really be investing based upon a headline I hope to have. I'm going to be investing based upon the market and the headlines, or I should say the realities of the legislative or macro environment that we have right now is how I invest every day. Look, if you're investing in a cannabis ETF today, you're investing before what I say is a wall of capital that is yet to come into this space. And look, if you're a big institutional investor, if you're a hedge fund, you don't need to catch the first, whatever percent in cannabis. You're waiting for some other real follow through. So, I think investors that are investing here are ones that are well ahead of that.
Before we wrap up, I just want to, segue a little bit and get away from what we're talking about in terms of cannabis and investing, and talk a little bit about, success and failure, because obviously you've been very successful over your career. You talked about, your beginnings and, how you got to where you're at today. But can you share with our listeners, because I think it's always fascinating to learn about someone's success and the obstacles along the way, a little bit about your success, and how much of that would you say is more luck, and how much would you say is attributable to timing to where you're at today?
Those are good qualifiers. I'd say, timing and luck are sometimes closely intertwined. For me, I think there's been hopefully a bit of both. I would layer in a whole lot of a healthy appetite for taking risks at certain times. And again, depending on when you take them in your career. But I think, younger people who are in a position to take career risks that are calculated should take them. And I think success is a function of, whatever percentage you want to put on it. It's a major percentage. How you conduct yourself. Conduct means not only ethics and transparency, but obviously it means work ethic too. So I mean, those things are critical. Moving to Russia in the fall of '98 was probably dumb luck. I was working at UBS for a few years out of business school, and I was trading what was then called G24 debt, which essentially is the sovereign debt, the government bond markets of every developed country in the world, especially before the euro convergence happened. But it was a really interesting place, really interesting job, great job, in a nice pathway there, and enjoyed it. But I had an opportunity to move to Moscow and go to work and have a much bigger job at a smaller bank that was focused on Russia and emerging markets at a time when the world actually, when I got there, it seemed like it had just blown up or was about to blow up. That actually ended up being, from a trader's perspective, the best time to be doing it. And emerging markets, resources, it was the beginning of a real cycle that went on for the next 10 years. But it put me in as a emerging markets guy. And that, I think, was a really important development for me. It allowed me to have the vision of understanding how certain types of asset classes might trade. And, I think I was willing to take that chance. And I think part of it was also, you meet a lot of strange people along the road. Be careful how you handle yourself. So.
Well, that's helped you get to where you're at today. Obviously, taking that risk and going to Russia, it sounds like helped you get to where you're at today. So that's a great story for young people to pick up on. But in those travels, obviously there obviously is failure along the way. We've all had failure in our, business life as well as personal life. What's been the biggest failure in business, and what lessons did you take away from, that failure to become a better manager and a better leader, if you will?
I think failure has often been, I kind of believe there's a limit to how successful you can be if you want to live your life with a certain level of conviction that you think is positive and solid and kind of what mom and dad taught you. So there are people that have a lot of success that are willing to do whatever it takes, not been willing to do that at certain points. And I think that's something that's maybe held me back. I don't have any problem sleeping at night though. And I think
you got to be able to look at yourself in the mirror every morning when you're shaving and be happy with who you are.
I've had moments where I'm not sure that I recognize the change that was going on in a particular industry or how my businesses need to change to that changing landscape. And I think people always need to understand, like, what's the seat I'm in and what could happen? How do I get knocked out of the seat? And what do I do if I get knocked out of the seat? Or how do I avoid being in a place where I get knocked out of the seat? And whether you're a hedge fund manager, whether you're a trader, whether you are investing in cannabis and have all your eggs in a particular basket or with a particular company. I mean, those are the failures that I'm sure at times, I have not calculated the risks attached to that. And times I've been, you dance with the one that brung you. I've done well by taking success and by being in highly volatile markets. And at times, I've probably taken too much risk.
Right. But you learn from that. That's the most important lesson from all. You learn from that and you move forward and you become a better manager and a leader because of that. And that's, the biggest takeaway that anybody can take from, failure, if you will.
Yep.
Absolutely. Last question, make it a little bit fun. Favorite book and the last book that you read?
I tell you what, for a guy that spent a lot of time in Russia, there's a book called Red Notice by a guy named Bill Browder, who was a portfolio manager that I covered at the time, who is a fascinating guy who took a lot of risks out there at a time when, a lot of people didn't live to tell those risks. It at some point is probably going to be a motion picture. I mean, it really is a fascinating movie, and it's certainly one where I think, you've got a lot of dynamics around what goes on in emerging markets there. So I love that book. I'm a big music fan, and I play music, and I've been in a couple of bands in most of my life, or different bands. But anyway, I'm a big fan of the band Wilco, and I'm just finishing up Jeff Tweedy's book, which is called Let's Go So We Can Get Back. And it's really a memoir of his life in this band Wilco, which I think is, again, one of the great bands that's out there today, but it's a band that's been around now for a while. And Tweedy came out of another band in the 90s called Uncle Tupelo. And people thought that the other guy in the band, when they split apart, was really the one that was going to be successful. And there's a lot of lessons in there too, especially in the rock and roll world. But I think there's no question that being an original in the world of the arts is what's going to separate you. And this guy is definitely that.
No, that's good to know. That is very interesting and informative, and I appreciate that. Well, this has been great, Tim. I really appreciate your time. I know you're busy every day. If people want to learn more about yourself or the fund, how do they find more information on you? I know you're on Twitter or LinkedIn. What's the best way for people to learn more about Tim and what he's up to?
Well, first of all, thanks, Joe. It's this has been a great forum and exciting times in the cannabis world. If people want to learn more about investing in our ETF, go to the Amplify ETF site. And again, it's the Amplify Seymour Cannabis ETF. And we were excited to share that we've rolled up a couple other existing cannabis ETFs onto the platform. So like to believe that this is a handful of funds now that are focused in cannabis, and we're the right place to be. I run a wealth management business, and we're there serving family offices and clients. And Seymour Asset Management is the name of that firm, and SeymourAM.com. You can get more information there.
Okay, terrific. Well, this has been great. Thanks for listening to Freedom to Buy this afternoon, presented by SuperNet each week. You can also listen to past episodes of Freedom to Buy on Apple Podcasts, Amazon Music, Spotify, and Google Podcasts. Please join us next week to learn more about Freedom to Buy and the opportunities in the cannabis industry. Thank you and have a great day, everybody.